गाइड कर दिया, बट आप अभी 5-6 सेकंड बाद बोलना.
अच्छा.
No.
Welcome to Value Research Helpline once again. Third weekend. We are quite encouraged by your questions coming our way, and I can see that you are still sending your questions. What we have done is, we got a lot of questions in the previous 2 weeks, and we looked at, we aggregated some of there were plenty of common questions. Many of you asking the same question, so we have put them together, and I'll first answer them and then move to the questions that you're posting right now. So I'm starting with Rajiv Dhanturthi. He's asking, what are your thoughts on active fund investing versus index funds? What is the future of passive funds in India? I've always held a belief that the active funds in India, simply given the variety of factors, the context that we live in, the Indian market, the Indian investors' behavior, the kind of institutional money that finds its way into index funds, that's very different as compared to when we read Bogle's book. We tend to become a believer in indexing. But we have to understand that our environments are very different. When we talk of America or Europe, we know that indexing, one is that the economy itself, there the whole economy is traded, publicly listed. In India, that is not so. A good part of our economy is not in the public domain where you can buy the shares of those companies. Mr. Buffett could buy the rail company. Here it is, in India, it is Indian Railways. It is a business, but it is not a business with a profit motive where you can buy into it. So in that sense, a good part of our economy is not part of things. So in that sense, our context is different. Besides that, we don't have the long-term pension funds, the 401k plan equivalent. We have it. We have started with the NPS, but it is not of a sizable scale today. So there, the indexing actually becomes, it becomes a self-fulfilling prophecy, in the sense that people put more money in index fund, and funds index stocks go up. There might be some active churn there might be some churn in the index. So what I'm saying is indexing is making inroad. Large cap funds have lost their plot, in the sense that the cost advantage of index fund is substantial. When you get a 10 base, an index fund at 10 basis point as compared to 1.5 to 2% management fee of an index fund, of an actively managed large cap fund. The actively managed large cap fund has to beat the index by 2% to match the index. So the odds are against them. But I still feel that, given the breadth, under-researched market that India has, our multi-cap fund, and when we look at 5-year, 10-year return, the margin of outperformance of many parts of the market which is represented or captured by these funds is still compelling. So I feel that active management, actively managed funds still have their golden days ahead, still have a strong case. Large cap funds have lost their case, and index funds will, over a period of time, will make inroads, will become popular, will become difficult to beat. But for now, I think next 4 or 5 years, active funds will have its good time. Anup Dheeraj Gandhi is asking has asked, should we go with the best buys as given by Value Research Stock Advisor at the moment, or wait for a correction in the market? Best buys now list of the in Value Research Stock Advisor is exactly meant to be that we have about 40 recommendations on our stock advisor service right now, and they're all good stocks. They're all good companies, and these looks most attractive of the lot. And the way to use Value Research Stock Advisor recommendation is that I'm assuming that all our subscribers are investing for 5 years and more. If you have these 40 stocks to choose from, choose these 15 if you subscribe today. Don't put all your money, spread your investments. Even when investing in stocks, it is important to spread your investments over a period of time, which means spread it over the next 6 months, 12 months, because perfectly timing it at the low will become very difficult. And when it actually gets very low, then you will be very fearful. So human beings, how do you navigate this, greed and fear? Is average your investments. What I can assure you is that we will be at it. When we are recommending these companies, we are closing them tracking them very closely, and whenever things change, whenever it is time to sell, we will tell you when to sell. If our investment thesis that undergoes a change because the company starts misbehaving or the outlook changes radically, we will be letting you know. That is why it is also important that you just don't look at the list of the companies in Value Research Stock Advisor. Don't just look at the best buys now list and invest. Try and understand the story. Try and understand the context. Try and understand the thesis. That way you'll be able to, most of the risk comes from not knowing something, not knowing enough, not knowing what you're doing. So by reading those theses, you basically know what you're getting into. You know why we are recommending it. You will also understand when we recommend a sale. You will understand the reason. So start with your best buys list. Spread your investments over the next couple of months, and don't wait for the perfect time. It may not come because the context has changed. I feel that the market should, is going up, and it could be quite irrational. But it can remain irrational for a while till central bankers actually, increase liquidity in the system, and lot of money finding its way into the market, and the real economy not picking up. So money will start finding will find its way into the market, and so market can keep going up despite the absence of fundamentals or the outlook remaining very grim. If you keep waiting, you'll keep waiting forever. So I would say that it will be perfect if you can time it at the lowest possible point, which there might be, but there is a possibility that you may not be able to wait for the stocks may not hit a low. So be at it. Abhishek Kavlekar is asking that if redemptions are high, can equity mutual funds also shut like Franklin debt funds? Yes, they can. In fact, all fund offer documents have this provision. They are enabled. But I think, that will be an extreme situation. The equivalent of Franklin debt funds shutting down is that if the equity markets shut down, and if the equity markets shut down, or there is a complete absence of liquidity, I think that is a possibility which cannot be ruled out in many of the small cap funds, because it's eminently possible that small cap funds, they invest in a kind of stocks where if a lot of investors turn up to take their money out, the fund managers will not be able to sell. And today they are able to sell by actually having a significant impact cost, which investors are prepared for when it comes to equity. Investors don't really complain about 10, 15, 20% decline in equity funds, but they will be greatly upset with debt funds. In fact, Franklin had to primarily shut down those schemes because if they wanted to sell, the price would have taken a big knock, and big knock would have been 5%, 10% on a daily basis, which would have been very significant for a fixed income investor. So that is why they had to shut down. Debt market is not that liquid, but debt funds, equity fund, it is unlikely. It has not happened as much. We have seen the big lows of 2008 in which the small cap funds also went down by 60-70% steadily, but none of the funds had to shut down. Even many funds do stop taking money in those funds, but there hasn't been a situation where funds have been shut down, but it is a possibility which can't be ruled out. Pran is asking that what do you think? Do you think other fund houses will start S&P 500 fund? Is that better than Sensex, the funds which invest in Sensex, in terms of only safety compared to a developed market? I don't have much concern about the safety of your investment in an index fund, and there's a possibility. Mutual fund companies behave. They try to catch. They try to copy, imitate, if there is a successful idea. If S&P, Motilal Oswal's S&P 500 fund actually succeeds in mobilizing money, then other fund companies will definitely follow. Ashish Gogia is asking that, can you advise if corporate bond fund would be better now compared to short-term funds, as they are a bit more secure and almost similar return? Yes, but make sure that you are getting into a fund which has highest rated the dominance of highest rated bonds in their portfolio. You just need to be a little careful, and this is not the time. Right now, I find that there is a great risk aversion. Don't get attracted to marginally higher return by assuming disproportionately higher risk. This is not the time to assume risk with fixed income, and it is amply reflected in the market behavior as well. Navneet Kumar Sharma is asking that, when are you starting mutual fund analysis service? We are not starting mutual fund analysis service, but we are just on the verge of, in a couple of weeks, we should be launching our Value Research premium account. A good part of it, you are used to it as a free user of Value Research online. You have your free account, which provides you the best online portfolio tracking of your stocks, funds, and NPS, fixed income, all your investments put together. And when you put all your investments at one place at Value Research Online, one is that the ease of setting it up. You can get your statement from CAMS, Carvi, or even your NSDL statement, which if you have a demat account, you'll be getting a aggregated statement from NSDL. It enables a seamless assimilation of all your information. All your transaction history can be put in Value Research Online without typing it. You don't have to really act. You just have to upload that account statement, and your portfolio is set up automatically. And then it starts giving you analysis. We have worked on enhanced feature in this premium account, whereby you will be getting reasonable amount of very intelligent analysis of your portfolio, that what is the the good investment that you have, the bad investment that you have, the inappropriate investments that you have, the suitable investment that you have, how diversified are you too diversified? So it will be able to answer questions which will help you act. We are targeting a large, we have got a large number of investors who have put their intent to subscribe to this service, and this runs in tens of thousands. So we are in a hurry, and I think we are also in a hurry because of this lockdown. We are in a hurry because of the lockdown, because you will have little more time to look at and absorb things which it can do. Besides that, the premium account will also offer you select a curated list of funds, which will be which Value Research fund analyst, a team of 5 people, will be closely looking at it, talking to fund managers, and we will be giving you a curated list of funds in which you should be investing depending on your context. Plus, there is going to be I am revealing the feature of this service which is not there on Value Research Online, which is the portfolio builder. You can come to the website, subscribe to the service, and Value Research Online will be able to take few of your questions in terms of for how long you want to invest, what is your goal, whether you are in the accumulation phase or whether you are a retiree who is looking to invest to derive in periodic income from this. So depending on your goals, depending on your experience, depending on your investment time frame, we will be giving you a list of portfolio. We will be giving you a curated list. It will be almost be a customized list, customized portfolio, which you can get. So I'm really quite excited about launching this service. Maybe we will enable, I will get back to you maybe in next 2 weeks time, using a Zoom interface, so that I can demonstrate you the features of Value Research portfolio, the enhanced features of Value Research premium account for you to evaluate whether it's worth going. But Value Research already has over 1 million people who are using a substantial part of the service. These are going to be significant add-on and analytical inputs to your decision making. A lot of you have been asking us to give us a curated list. You want a reaffirmation. You want to clean up your portfolio. You want to improve your portfolio. So the premium account will enable you do that with confidence and with ease. Uh, so Nilima Saraya is asking, would it be wrong to make a lump sum investment when the market is down and money is handy? I will be sounding almost like Sir Humphrey in of Yes Minister, that yes and no. Yes, if you think it is going to be low and you are right, but no if you turn out to be wrong, even if you are right. 5 months, 6 months. So don't you, so that you eliminate the risk of catching a market high. Because if market goes down by 20%, I won't be surprised, and so would you. But if you think that today is the low, we don't know. And at any given point, future is uncertain. So just spread it so that your emotion is in check and you are on to some plan and you don't have deep regret soon after investing. Ankit Mishra is asking that is 9 to 10 year time frame sufficient for a small cap fund? Yeah, I think so. Before the whole crisis started, we did a cover story in Mutual Fund Insight that what is the minimum time frame in which you always make little more money than all other kind of equity funds as compared to in a small cap fund. And that time period turned out to be based on the parts, being disciplined and having a very strong stomach to be able to withstand the big declines which small caps can demonstrate. That could be quite shattering. Sometimes it could be very difficult to stick to that plan. But yes, a 9 year time frame looks like as of now, the fund went down almost negative. I've stopped all SIPs. I'm looking to liquidate my entire portfolio to save from loss. Please advise how to exit. Rajesh, you are doing SIP in equity fund, which I expect you are. Then you should have been, you should have this time on your side. This is the best time to continue your SIP, and it is in you not to do that. But if for some reason you need the money in 1 or 2 years' time, and you need to exit because it is for all out. But I would say that it is very inappropriately timed. Brigadier Ashutosh is asking that in what time frame do you think Indian economy will fully recover? Sorry? Connection. Not connected to my. Just see if this works.